Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on the gold market. So you can see that although in general in the gold market and the euro currency we recently had approximately the same patterns. I mean, bullish covers have been formed there, and in the euro the performance was quite different. So if in the euro currency we have seen some bounce up, and that was a nice reaction with the grabbers on the back, and there the Polish context has not failed yet, and it still exists on the intraday charts. On gold, the bears wins, and here first reaction was to the downside, although it's really significant. So in fact, market was dropped through all supports that we have discussed on the bullish context, and now just keep going to the major target, which is 1760, as we said yesterday. So now it is completed. In general, at the same time, the overall statement from Jerome Powell was not as bearish as we see the performance of the gold market. Mostly it was relatively gentle and soft, and as correctly said, the analysis of the JP Morgan, they said the tapering is not the tightening yet, and we do not have the tantrum tapering. We have gradual and slow and gentle, soft adjustments of the balance of the Fed Reserve. We should also understand that within the tapering period, the balance still will increase for 400 billions. So overall background doesn't look strongly bearish for the gold. And on the gold, it mostly supposedly maybe some emotional reaction because, well, yes, we will also got some improvement in the ISM index in the United States. Nice ADP report also was probably has brought to some making the overall sentiment a bit more bearish on the market. But overall background and reaction, we can't call it as miserably bearish. Besides, Jerome Powell and Christine Lagarde made a hint that markets should not expect aggressive turning to the tightening period. So, in other words, they have said, then hold your tightening horses. So, despite what the Bank of Canada said and what is Reserve Bank of Australia told about the overall situation, Fed intends to keep that gradual approach to the markets, and that's supportive to the gold. So probably here we have some overreaction in the short term, and it tells us that maybe we're currently difficult to say whether the market will reverse it totally this upward action or downward action. But we could say that on the intraday charts, probably some a bit higher, some deep retracement to the upside has good chances to happen. Besides, we have non-farm payrolls ahead, and maybe it will improve at least some short-term context, short-term situation in the market. So at least currently what we have here, a drop on the 618 support. This is also agreement support, as you can see from the hourly time, 4-hour time frame chart. It's XOP agreements, and here we could expect a bit stronger bounce. So this is strong support area. Besides, here we have some emotional relief after the Fed statement. So emotionally, it's also market need to take some breath. The divergence that we have discussed has been completed. Let's take a look. Market has dropped below the bottom between two spikes, which is build the divergence. So from that standpoint, the bearish patterns have been completed. Now what we have on the hourly chart, how we could treat current situation. So on the hourly chart, a few interesting moments exist. And first of all, here it's nice match between the extensions. And potentially we could call it, well, theoretically at least it looks like some kind of the three drive pattern, because second stands precisely at 127 of the first, and third stands on the crossing with 127 of the second, 1618 for the first. So this is classical ratios of the 3 drive pattern. It would be nice to get the divergence, but currently we don't have it. Anyway, this is first moment. Second moment, on any pullback that we saw this action, it stands relatively stronger, and currently market stands only on the halfway of this upper direction. Here we also have the strong resistance around 1780. So it means that in a very short-term perspective, and for today's session probably, we have short-term bullish context that's suggesting a bit higher retracement. So kind of the A, B, C pattern could be taken, could be happen. And here, if you're a scalp trader, you could consider taking some scalp long position with anticipation of the second leg. So here we could get something like, I don't know, maybe it's kind of the ABCD pattern. So something of that sort. Maybe retracement will be a bit deeper. It will be closer to the 618 level and completion of the harmonic swing that you could see with the gold market. That's what about in the short term. In the longer term, we need to see first of all what the non-farm payrolls will get. Bank of England also could make impact on the market, because especially if they will change the rate. If they will not change, that will be supportively for the gold. It will be positive mood here. And that probably should clarify us if market will break it up as confidence starts creeping higher. It means that on a daily chart, this reaction will be short term, and market could keep going in opposite direction. Besides, if you'll take a look at the interest rates, let's take a look what we have. Yes, recently we've got the bullish actions, which was actually bearish for the gold, right? So interest rates have been jumped. Market has formed a bullish reversal candle here, and maybe they could climb slightly higher based on this recent reaction. But in general, that could lead to a pairing of this pattern. Currently, a relation between interest rates and gold not very strict, but anyway, if we get some short-term bearish pattern on a daily chart on interest rates, that will be supportive to the gold market as well. So let's keep watching what will happen on interest rates, especially on this pattern. What will happen around 165 area. So if market will fail to pass through it, that will suggest that indeed we could get the reversal pattern on the interest rates, and that could trigger correspondingly a bit deeper, stronger upward direction on a daily chart of the gold. Not necessarily it will be new high, but at least some bullish upward reaction here could start. That's 2 moments to keep an eye on. In general, as I said, overall sentiment and the reaction and the statement from the Jerome Powell are not very bearish for the gold. This was relatively gentle, and that's why we suggest that here indeed at least a bit deeper retracement should happen, but also a chance exists that maybe market even will show some short-term intraday reversal and some returning back to the previous top. So something of that sort. So that's 2 moments to keep an eye on gold market. Besides, if we'll take a look finally, the final moment, is we will deal with this as a 3 drive. As you know, the minimum target of the pattern is the top between second and third drive. So theoretically, from that standpoint, market should climb about the 18 even. So that's also the idea that maybe it's not everything lost yet for bulls, at least on the intraday charts.